Did you know that 7 out of 10 Americans who have medical bills say that they have to lower their spending on food in order to avoid a medical bankruptcy? Navigating our highly complex world of healthcare and health benefits leaves many people feeling like a snowball in, well, you know where. I'm Josh Butler, healthcare consultant and advisor to more than 150 employers around the country, and this is A Snowball's Chance in Healthcare, a show about restoring hope in healthcare. Join us as we discuss ways you can lower your healthcare and benefits costs, how companies are winning the healthcare and benefits battle, and how hope is being restored to this community and communities across the country. Hello again, and welcome to another edition of A Snowball's Chance in Healthcare. I'm Josh Butler, your host, and I'm the president of Butler Benefits and Consulting. We are a local brokerage and healthcare consulting firm here in Amarillo, Texas. And each week, this show is about restoring hope in healthcare. So many businesses and people and families have given up hope that anything meaningful can be done in healthcare to lower costs, to better manage this sector of a business, or to provide better benefits simultaneously for employees. And we know that that's not true, and each week we spend a little bit of time debunking some of the misconceptions in healthcare, and we're sharing innovative solutions and tips and strategies that local employers and employers all across the country, not just here locally, are implementing to dramatically reduce the cost of healthcare. The cost of healthcare, as we've mentioned, has become 20% of the entire GDP in this country. It's the leading cause of personal bankruptcy for individuals in this country, and everybody knows how expensive healthcare can be. And so we talk and discuss strategies on ways to address that within companies, because over 2/3 of this country still accesses our healthcare system via an employer-sponsored health insurance plan. Now, if you think about how people are covered today, a lot of people are on Medicare. That's for people that are, over 65 years old predominantly, or maybe you've been disabled for many years and you qualified to receive Medicare early. For the most part, Medicare is for people over 65. And then a big chunk of the individuals in this country and families are covered through an employer-sponsored health plans. And today, we're going to talk about a little provision in the Texas state law that allows employers, even small employers, down to as small as 2 employees, to access and get access to claims data, to information that employers need to better to make better healthcare purchasing decisions and insurance purchasing decisions. And it still shocks me that that employers in this state have access to this information, but it is not uncommon at all, ladies and gentlemen, for me to come across an organization, maybe a 5-man company or a 20-man company, and they had no idea that this law exists and how to leverage this law to really have more meaningful conversations around concepts like self-funding or partially self-funding or maybe even level funding. Many employers are starting to embrace things like level funding, even small employers. And so today we're going to discuss House Bill 2015 or HB 2015. It's called HB 2015 because in about 2005 or 2007, somewhere around in there, the state legislature enacted this law, which pretty much mandates that insurance companies must share information with fully insured employers, even as small as 2 employees. So don't think that you have to be a large employer to access data and claims information. Now, this comes with a caveat. It's not the most detailed information on the planet, but it's enough information to start to have conversations with people like your broker or your advisors or your consultants around strategies and concepts that can really, really have an impact on your claim. And today, we're going to talk a little bit about HB 2015 and what you employers, what you HR managers, you CFOs, you business owners, this show is dedicated to you folks. And we're going to, if you're not leveraging HB 2015 data, you need to start because, like I said, it's not perfect data, but it at least gives you a starting point on what you can do as an employer in the state of Texas. Also, not every state has an HB 2015, okay? Not every state gives even small employers access to their claims data. And I've spoken at conferences, and we have clients around the country. And you Texas employers, you're very fortunate. We are very fortunate that we're able to get specific claims data. And I'm going to cover some things. You may be thinking, if you're a person that's listening to today's episode and you're like, oh, I'm already familiar with HB 2015, don't tune us out just yet, because I'm also going to be covering some things that are also a part of HB 2015 that are commonly overlooked, or they're commonly withheld from the insurance company standpoint. So first, I already kind of told you a little bit about HB 2015. It applies to all fully insured plans, fully insured employers as small as 2 employees. It also applies to government plans, so cities, counties, school districts, water authorities. These are all public sector employers. HB 2015 is also applicable whether you're in an association, like if you're a county and you're with the Texas Association of Counties. This law is applicable to risk pools, like that's what TAC is. That's also what TML is, the Texas Municipal League. So you cities out there, don't think that just because you're part of a TML that they're not required to share this data with you as well, because they are. It is applicable to government plans. So a couple things you need to know. Now, there's some guidelines to requesting, because you do have to request these reports from your insurance company, whether it be Blue Cross Blue Shield or First Care or United Healthcare or Cigna. It doesn't matter. They don't just give you this information out of the goodness of their heart. Okay, you got to be a little bit proactive, and if you don't know exactly how to do that, you can reach out to us. We have templates with every single carrier out there that we are happy to provide people. Or you can contact your broker, or you can contact the insurance company directly, and they can advise you on how to request these reports. But here's the first thing you need to know. The HB 2015, House Bill 2015, only allows you as an employer to pull these reports twice a year, okay? So if you request it more than 2 times a year, the carrier, the insurance company, is not obligated to give you more than 2 reports a year. So keep this in mind, that I know that you may say, oh man, I'm so interested to find out what my claims data looks like. I'm going to go out tomorrow and request it. But you need to keep something in mind and be very strategic about the way you request this data, because you can only pull it twice a year. Now, obviously, you want to pull a report as close as you can, or maybe coinciding with your annual health insurance renewal process. You know that 30 to 90 day period, usually the only time of the year when employers are looking at their benefits anyways, and you get your next year rates, and it's called your renewal or your open enrollment period. So you definitely want to be able to save one of these reporting packages for that time of the year, because it can be extremely helpful if you're considering alternative funding strategies like self-funding or level funding. Having the latest claims data in your hip pocket will allow you to have a much more efficient open enrollment process when that time comes. So be strategic when you pull your reports, because you can only pull those reports and request them twice a year. They typically just go on a company letterhead. There's a standard template language. You typically have to put in your group number or your group ID. There needs to be a signature of the plan sponsor, or it could be your HR manager, it could be the CFO or the owner, and then you just send that. And then the second thing is that the carriers must include, 36 months worth of data. So if you've been with Blue Cross Blue Shield for 10 years, they are required in this data, this reporting data, they're required to give you 3 years worth of that data. Or they have to give you data for the entire period that you've had coverage with them. So say you've only been with Blue Cross Blue Shield for 12 months, then they're required to give you all 12 months of your data. If you've been with a carrier for longer than 36 months, they are required to give you a minimum of 36 months worth of data. Now that's pretty important, because I have seen where some carriers fudge on this, and they don't give 36 months worth of data. They only give 12 months worth of data. So again, you need to understand what provisions there are in HB 2015, and they must include up to 3 years worth of data if you've been with them for 3 years. Now, I'm going to tell you what other things that they're required to give you, and I'm also going to point out some things that you might have to push a little bit harder. You might have to remind them that this is part of HB 2015, and that you do have, the authority to request this data, number one. And number two, you're entitled to it. This is your information, ladies and gentlemen. This information is your information. You are the plan sponsors. I'm talking to employers. You are the plan sponsors, and this is your information. All of this data must include some specific things. So let me hit a few items here, a few bullet points. Number one, it must include an aggregate claims report. And when I mean aggregate claims report, this is all the claims dollars in dollar figures that have been paid out in your organization for medical, pharmacy, and dental, ladies and gentlemen. A lot of times employers overlook that they're not getting this information from their dental carriers. If you get dental and you bundle it with your health insurance, be sure to remind them to send utilization and claims data on your dental benefits and your pharmacy benefits. It has to be itemized out. So 3 years worth of data, but it has to be aggregate reports. That is all claims paid for medical claims, dental claims, and pharmacy claims. Okay? Now, many carriers, including specific dental and vision carriers, they don't think that they have to abide by HB 2015, but they do. And so there's reasons why you're going to want to pull this data. I mentioned the biggest one is when you're having different conversations around some of your funding methodologies. Number two, they must give you a report of the total premium paid by month. Okay? So in addition to all of the claims paid, they have to give you a report on all of your premiums paid. Now, just with these two data points, ladies and gentlemen, you are able to then establish a very baseline and crude loss ratio. Here's an example. Let's say you pay an insurance company $100,000 a year in premium, and then your claims are only $50,000. Then your aggregate loss ratio is only 50%. Okay, that's a very good and healthy loss ratio. Here's a tip for you. Health insurance companies on fully insured plans, depending on your company's size, are looking to have estimated and established loss ratios of 85 or 80% or lower. Anything below 80%, ladies and gentlemen, make no mistake about it. If the loss ratio is under 80%, the health insurance is making money on you. They're not losing money. Okay, so when you factor about 20% for overhead, then 80%, that's where we get the 80%. This is all part of the medical loss ratio provision of the Affordable Care Act. And that's a whole nother episode we're going to do, about the medical loss ratio in the future. But right now, you need to know that if you get this is called your Tier 1 report. Total premiums, total claims, that helps you establish a total loss ratio. If your loss ratios are under 80%, you know that the insurance company is making money. Next, number 3, they are required to give you a total number of covered employees by month. Okay? So just with these first 3 reports, aggregate claims on medical, dental, and pharmacy, total premium paid by month, and the total number of covered lives, with this information, ladies and gentlemen, we can begin to benchmark. Benchmark by how much premium are you paying per member per month? What are your pharmacy claims per member per month? What are your medical claims per member per month? And we can start to establish baselines, or what we call benchmarks, to see at a very high level how well or how poorly your plan is performing. Okay? So let me make it more clear. If you get these loss ratio reports and you establish your loss ratio, and let's say it's 70%, then we know automatically that you are likely, not guaranteed every time, but you're likely a good candidate for self-funding or partially self-funding or level funding. And that's why we get this data. We start to get a picture of what your population risk looks like, what your loss ratios look like. Because if we get your data back and your loss ratio is 250%, then we know that you're probably not a good candidate for self-funding or level funding. So this is not a silver bullet by any means, but it does establish and begin to establish a baseline for meaningful conversations. With these first 3 reports, we can start to benchmark how well is your plan performing compared to other plans in our area, other plans in the nation, and things of that nature. Number 4, you have to request this, but this is a very commonly withheld report. They have to give you the total dollar amount of claims that are pending that have not yet been paid, but they've been incurred, they've happened, they just haven't been paid yet. And this is something that a lot of the carriers withhold. When I mention strategically waiting to request HB 2015 at renewal time during your open enrollment, this is a key report, ladies and gentlemen. You don't just need the claims that have been paid to date. You can also request the number of claims that are pending, waiting to be paid, because it could be a big claim. Maybe somebody had a big surgery and that claim hasn't processed yet, but the carrier knows it's out there, but they're not reporting it yet. So make sure that in your request templates that you're involving and including language to request this. It is the dollar amount of claims pending in a plan that's commonly withheld. Number 5, they will provide you with what we call a Tier 2 report. The Tier 1 report is your total claims paid versus total premiums paid in versus total claims paid out. That's called your Tier 1 report. Then the next one is called your Tier 2 report, or your high cost claimant report. Now, most carriers de-identify this report, so you don't know specifically who this employee or plan member is, but we're going to talk about that next. But most carriers go ahead and de-identify this report. But the Tier 2 report, the high claimants report, is a report on any plan member. Can be an employee, can be a spouse, can be a child, that has exceeded $15,000 of medical claims. That is medical and pharmacy claims combined. So that starts to give you a good sense of, do I have high-risk individuals within my population? If they have more than $15,000 claims, maybe they're taking a costly medication. Maybe it was COVID. Maybe it was pneumonia, or somebody had a baby. There's a lot of things that can drive $15,000 in claims, but most people do not incur $15,000 in claims. In fact, I had a meeting today with an employer. We were reviewing some HB 2015 data, and they only had one person out of 50 that were on their plan that has exceeded $15,000 in medical claims for the year. So that's pretty good, 1 out of 50. This starts to give you, as an employer, a picture of what your population risk looks like, what your utilization looks like, what your loss ratios look like. All of these things help people like me, a consultant, decipher this information and start to bring your group into focus to see if you're a good candidate for alternative plans. Plans like self-funded plans, like level-funded plans that can dramatically reduce your healthcare costs, right? Okay? The next one, that is a very commonly, that's a very common report, but you have to request it separately. The carrier will send you Tier 1 reporting, okay? In order to get Tier 2 reporting, you got to request it separately, all right? Last, upon request, the carrier is also required to give you what is called a pre-certification report. These are reports on people or doctors or hospitals that have called the insurance company to request pre-authorization or pre-certification, typically for a hospital stay. Most hospital stays, before a person is admitted, if it's not an emergency, so if it's a non-emergent hospital admission, that has to be approved through a process called prior authorization or pre-certification. Okay? Carriers have these reports. So if you request it in your template that you want all pre-certification requests, that also gives you an idea of what's on the horizon. Okay? Does that make sense? That it's something that's been requested in the last 30 days to be pre-certified or pre-approved. This is not going to show up in your claims data because it hasn't even happened yet. That's the purpose for the pre-certification report, to request the pre-cert report. It's going to give you a little bit look around the corner on what's coming up, what's being pre-authorized in that 30-day snapshot. That is a very, very valuable tool as well at renewal time when you're trying to shop for more affordable options, or maybe you're trying to get stop-loss coverage on a self-funded plan. All of this information is critical to an underwriter. It's critical to an actuary, and you have it at your fingertips through these reports, okay? Now I'm going to talk about something that a lot of people don't know about HB 2015 data request. Per HB 2015, employers can receive, and employers are entitled to receive protected health information, what is called PHI, on their employees, okay? A lot of times the carriers may tell you, or a broker may tell you, you can't, all of this information has to be de-identified. It comes standard de-identified. But if an employer puts in an additional request, then I'm going to read you the language from HB 2015 that you have to submit along with your HB 2015 report requests. And if you put this in your template language, you are entitled to PHI, personal health information. You, as the plan sponsor, are entitled to know, who these high-cost claimants are and where your dollars are going. But you got to put that in writing, and it has to say, let me just read it says. It says, a plan sponsor is entitled to receive protected health information under subsection C5 and 6 and section 1215.004 only after an appropriately authorized representative of the plan, that could be like an HR manager, right? An appropriate representative of the plan makes to the health insurance issuer a certification substantially similar to the following certification. Here's the language we use in our HB 2015 data request. I hereby certify that the plan documents comply with the requirements of 45 CFR, sections 164.504, and that the plan sponsor will safeguard and limit the use and disclosure of protected health information that the plan sponsor may receive from the group health plan to perform the plan administration functions, end quote. That's the language we use in our HB 2015 requests, and we do get PHI information for our plan sponsors. Now, if the carrier pushes back and says, no, that's a violation of HIPAA, it's not. And then there's a further subsection, 1215.005, within HB 2015, and here's what it says. Compliance with this chapter does not create liability for the carrier. A health insurance issuer, that's the health insurance company, that releases information, including protected health information, in accordance with this chapter, has not violated a standard of care and is not liable for civil damages resulting from and is not subject to criminal prosecution for releasing of that information. So right here, the carrier's taken off the hook for sharing personal health information. So you can get PHI information in this as well. So that's kind of like the gist of HB 2015. It is encoded into the Texas law. And, so my question to leave you guys with today, as we're starting to wrap down and kind of wrap up here, is how is your organization currently using HB 2015 today? Are you sitting down at least once or twice a year with your broker to cover HB 2015 information? And how is HB 2015 data playing a role in your annual renewal process? If it's not, ladies and gentlemen, this is trying to decipher, what your household budget's going to be like for the next year, but you have no idea what your mortgage is. You have no idea what your groceries cost. You have no idea, what your homeowner's insurance is going to cost. HB 2015 gives you a baseline. It gives you a place to start to analyze your utilization, your population health, and give you insights into your plan designs and see if you're a candidate for things like self-funding, okay? And so just a few things to remember. Be strategic. You can only pull this data twice a year. Know what is covered under HB 2015 and make sure you get with your broker to say, hey, I want to take a look at this stuff. And if your broker doesn't know how to advise you, you can always refer back to this episode and go directly to your insurance companies, or heck, call me. We will show you how we use HB 2015 and leverage this data on behalf of employers. But again, thank you so much for tuning in this week. It's been a great week. I hope you guys are staying cool out there. Until next time, I'm Josh Butler, the host of A Snowball's Chance in Healthcare, and each week we are giving employers strategies, tips, solutions so that they can have a snowball's chance in healthcare. God bless. Have a good weekend.